Morning, everyone. My name is Amit Ratanpal. A quick background of myself is born in Calcutta, came over to Bombay with the big dreams. Started my career with BLinC Life and then moved to ICICI Bank. So my first 11 years was in financial services. And this was immediately after I became a chartered accountant. And within this 11 years, I worked very closely in becoming a founding member of several businesses ranging from e-broking as early as 2000 to private equity funds business, as well as the offshore asset management business for the ICC group. Post that, I ventured myself into the private equity venture capital world, co-founded India's first private equity fund, which only invests in the education sector, ran that for 4 years. And then I started BLinC, which was initially a proprietary investments, only in two sectors, that is Edtech and Fintech. Delivered overall 4.5 times multiple return, 40% IRR to myself and to few of my investors who participated along with me. And as we speak, we launch a 100 crore fund. Again, we will invest into Edtech and Fintech. And we've already made our first investments. So that's a very quick background about myself. Technology will always be innovating itself, and we can talk about different examples. If you take the era of 2015-16, specifically in the education sector, at that time everyone was talking about online learning. It did pick up for some time. Obviously the COVID happened and there was the only option was online. Did pick up, but as we see today, people have also realized that the outcome in the education sector is through blended learning, and that's where you see some of the large education companies have started opening their physical centers as well. So I think how we would look at anything on the technology piece is by saying that how it's going to help the end consumer. Is it going to facilitate it? Is it going to make his or her life easy? Or even to the SMEs world, in a classic example could be insurance, right? Today, if earlier days, if you wanted to buy a health insurance, it means we may have to go through checkups. There will be a lot of history details, and we'll not know in for 2 to 3 weeks whether the policy has been issued or not. And if you see a classic example of Vital, which is a insurtech company where we have made investment in flat 60 seconds, you can buy your insurance policy along with all the wellness benefit. So I believe that technology, the focus has to be: is it going to ease customers' requirement? Is it going to facilitate customer requirement? Is it going to make life simpler, better? And that's where I look at the technology will keep on evolving, and we're seeing huge trends, right from metaverse to a lot of other things coming, and Web3 also coming in. So we do believe that this innovation will be ongoing to facilitate easy access to consumers. So if you see my first 10 years of my life, while I spent in BLinC and ICICI, my key strength always have been building businesses in financial services. As I mentioned, I built the e-broking business for BLinC Life. Then for ICICI, I worked on product strategy for the global expansion or the offshore AMC. So I love building businesses. So that was my key first strength. Education, when we started initially in 2010, was because it was easy. We thought that it would be easy to raise money with one sector. Obviously, we raised a good amount of money at that point of time in 2010. And as I sort of moved in this particular sector, that is the education sector, I realized that there is a large opportunity. So by this time, I would say 2014 and 15, if you see, my experience has been in financial services and education. So idea was to leverage where I'm strong on or what my strengths are. That's one. Irrespective of that, if you see both these sectors, that is education and financial services, have been the most resilient sector even during this COVID times. Kids, everyone thought that kids will not go to schools or skills development will not happen, but in real terms, everything shifted to live, and there was a huge uptake which we have already seen. And in terms of financial services, while the branches were closed, the transaction went on, and every day buying, selling of anything happened to complete digital. So these are the two sectors which touches across industries, across a different age group, and whether it is kid as young as 2 years old or a child as 2 years old to an adult which could be 50 years old in terms of education. And financial services, as I mentioned, SMEs, individual, large corporates, EV sector, pharma sector, technology sector, all these sectors are part of financial services. So It's a very, very large sector, and both in terms of depth as well. So if you see overall size of the sector, education is about $120 billion. It is expected to grow multifold from here. India's penetration on the higher education is just about 18 to 20%. The huge dropouts are there. Youth skills shortages are there. The number of people who are unemployable is between anywhere between 15 to 20%. If you look at financial services, insurance sector in India is just about $100 billion, while in the US it's $1 trillion. If you look at wealth management, the demat accounts, which everyone are looking at, you've got about 4 to 5 crore accounts, which is just about 5 to 6% penetration of the overall population. So the opportunity is very, very large in both these sectors as well. I think the key USP is building on what our strengths are. That we love building businesses. That's what we've been doing from scratch to build a business which is revenue, cash flow, and profitable business. So we work very, very closely with all the founding members of our portfolio companies as if we are a co-founder to them, and add value from strategy, organization building, business development, network, everywhere, wherever we can, and which would add to the underlying portfolio company. So one is obviously the co-founder approach. Because we only focus on these two sectors, that is EdTech and FinTech, we are very deep in both these sectors, and that obviously makes a difference in which we approach all our portfolio companies and how we look at these companies. That this few companies which we are going to make investment, can this company become $1 billion revenue company? Not about the valuation you're talking about; it's about the revenue which we're talking about. And the third piece, what we will be doing within this BLinC portfolio, because of our hands-on approach and the way we are adding value, we'll be creating about a very small portfolio relatively of about 5 to 7 companies, so that we can really work in very closely with each of these portfolio companies to help them to grow the business. So I think these are the 3 key USPs, and basis of these 3 key USPs, the team has been built on that. So my partner, like for example, R.K. Rangan, he brings in about 30 years experience in financial services. He was the CEO of Lehman Brothers and then Nomura in India. And all my team members are either from education or financial services background. And that's something which obviously makes a difference as we approach, making investments in EdTech and FinTech. From a pure company perspective, when we would look at investments, sweet spot for us is to make anywhere between 5 to 20 crores of investments per company. And we would prefer to invest in a pre-series A. That means the company would have a team in place, a product in place, and some traction. It could be as small as 1 crore of revenue to as high as 15, 20 crores of revenue. This is one sweet spot which you would like to look at. Ideally, we want to always have between 15 to 25% of the company. We will always be on the board. As I mentioned, we are value-added investors. Without a board seat, we will not make an investment. And I think the foremost of this entire piece is the alignment with the entrepreneur or the founders, where they believe that we are equal and we can work together. We are not, while we are investing in your company, but we are going to work together and build this business together. So they should also accept and be open and flexible to work together with us so that we all can build the business. And finally, as I mentioned to you, is whenever we look at the white spaces where we would like to make investments, we look at, they say that hey, can this become a 100 billion, can it become a $1 billion revenue company or a 5,000, 7,000 crore revenue company? Is this a company where we can create a sustainable revenue, cash flow, and profit? All these are the criteria which we look into the companies, as we make potential investments. Our complete focus is India, while saying that some of our portfolio companies may reach out to different parts of the world as well. And we've seen in the past as well, like Imarticus Learning, which is an education company which provides training in financial services and analytics. While started in India, they do have footprints in Southeast Asia and Middle East. In fact, they have a branch in Middle East as well. So some of our portfolio companies for sure will go global. At the same time, as a long-term vision is to become number one VC fund in a pre-series A or early stage growth company. Start from India, and then if we also would like to look at Asia, because we do believe that what we are seeing the trend in India, will see a similar trend in Southeast Asia and Africa as well over a period of time. So yes, idea is to be global, but as of now, our focus is very much India.
For more updates from CXO TV, please like and subscribe to our channel.